Hey everyone, welcome to the Your Money Your Life podcast. We're at episode 299 of the pod. Make sure you're listening, do a few things. You like, subscribe, 5-star rate and review this podcast. We have a bunch to get through this week. And yeah, we're going to get through a lot of things this week. We're going to talk more about what's going on in the market like we do every week. Talk about some big stories, updates that people need to know what's going on. So let's jump right into it and talk our first story of the week. That's actually a big story. I want to start there. The government shutdown. Government shutdown. We're still in a government shutdown right now. We're in the longest. Here's a list of the longest shutdowns that we've seen. 2025, we're at 22 plus days. Ongoing 900,000 employees furloughed. And yeah, that's the second longest in shutdown history. The first longest being the 2018 to 2019 shutdown, that was 35 days. So we're still shut down. That's a thing that's to be known. We are still shut down. So that's a lot of heavy weight on federal employees, people that have been furloughed, people that don't know what's coming next. That is a lot to stomach, I would assume, for many people out there. Let's jump into the actual market update and what's going on. Let's first dive into what analysts are saying. So we're seeing the market move higher today. I've recording this a little bit later than normal, and it will be out. But as of now, the market is higher. Rose early Thursday morning. Tech space is doing well. Investors are regaining their footing following Wednesday's slide. Wednesday pulled back a little bit, but investors seem to be regaining their footing as of right now. There's a few things coming up for investors to watch. There's earnings from the biggest U.S. companies, which many believe could be make or break for the current bull market. So many people are watching earnings for this current season. Is this something that could cause a correction, or is it something that will pull us even further? Because we are in a bull market right now and have been since about late April, right? And so it's been several months of the market just kind of chugging along. Of course, you have the Magnificent Seven, the tech companies that are doing really, really well in this environment. And so we'll be watching their earnings super, super closely. More than 80% of the S&P 500 companies have reported so far that have reported so far have exceeded earnings expectations. That's per FactSet. So they have that information for you guys there. And so there's also Wall Street watching oil prices. The Trump administration imposed additional sanctions on Russia, Russia's two biggest crude companies, due to the country's lack of serious commitment to a peace process to end the Ukraine war. So oil prices are something to watch as well. You've seen gold. We're not huge gold fans, but if you look at what gold is doing, it seems like investors are looking for a replacement for their dollar. If they're invested in the dollar, which is interesting, you could actually invest in the US dollar index, but investors are looking for other areas, crypto, gold. Investors are finding other areas for the dollar because the dollar has deflated in value over the past year. Year to date, it's not done well. And so that's part to do with inflation. That's due to a mix of factors. So people are looking for different avenues for stale cash. Existing home sales down in September. Home sales hit the highest levels, excuse me, since February. So home sales it's a 7-month high in September as mortgage rates edged lower. So mortgage rates came down. So home sales went up a little bit. People felt a little bit more comfortable. Existing units sold 4.06 million annualized pace, according to seasonally adjusted numbers. So we saw that in gold prices again over 4,000 an ounce, which is pretty interesting. It's been on a tear year to date again because investors are looking for another avenue outside of the dollar, and so investors have found that in gold. Let's go to our chart, our S&P 500 chart. It's showing on a 5-day basis. We're up almost 2%, well, 1.75% roughly. And on a month basis, we're about 0.5% up. And then 6 months doing really, really well. That's about that April, May timeframe. People were buying there, that 6-month time frame. Really, really well. Year to date, also really, really well as well. So again, this bull market has been something to watch. It's been a bull market for folks, and that's can't be hidden. It truly has. Let's look at more current updates and news. Disaster spending becomes a hidden economic driver. I was actually hearing about this from someone. With damage from natural disasters climbing, the recovery industry has driven growth in ways economists are only beginning to understand. Bloomberg reports the U.S. spent nearly 1 trillion on disaster cleanup over the year ended in June, up from the inflation-adjusted 1990s average of 80 billion. That's crazy jump. The ripples all felt from insurers to trash haulers to engineers, and disaster spending accounted for 36% or 7.7 trillion of GDP growth since 2000. That's crazy. 36% of GDP growth. That's incredible. So this is pretty much saying disaster spending, which is, of course, we don't want natural disasters or any sort of disasters, but to recover, to do things, to move trash, to rebuild, to rejuvenate, that costs money. And it usually comes from, I'm assuming, federal and state authorities, and they're contracting out to insurers, trash haulers, engineers, people that are doing these rebuilding efforts, and it's driving GDP growth, which is a weird cycle, chicken and the egg. So do they want more disasters? Does that drive growth? I don't know. That's a weird a concept to kind of think about in general. But that's happening. Another report, all eyes are on Friday's inflation report. So Friday marks the shutdown delayed release of the consumer price index. Remember, we're supposed to get that earlier, but we're getting it Friday. So we'll be able to talk about it until Thursday for the Your Money, Your Life listeners. If you're on my TikTok, I might do a video on it. But we're finally going to get an inflation report for the last month. According to Bloomberg survey, economists expect a 0.3% rise in core CPI, that's excluding food and energy, for September. Some believe the S&P 500 index will continue to rally nonetheless, buoyed by the Fed's expected interest rate cut next week. So the Fed is supposed to cut rates again next week, which again is a positive sign to some investors about growth and rallies in the market. But the consumer price index data we need to see. The Fed hasn't received it apparently. They haven't released it, and we are getting the delayed report coming out tomorrow on Friday, which is kind of interesting because of the shutdown. We're getting delayed reports and data and things of that nature. So that's one thing we'll have to see. Another story that I want to breeze through, but Meta plans to cut 600 jobs in its AI superintelligence lab. Remember, they were just hiring like crazy, but they plan to cut 600 jobs in AI intelligence unit. Knows a superintelligence lab. This is according to media reports, marking the latest shakeup amid the social media giant's push to integrate the technology throughout its products. So they're, again, rethinking and reshaping how they build out their team for AI and cutting 600 jobs. I thought this was interesting. Travis Kelce Investor Groups takes a 9% stake in Six Flags. Travis Kelce is, of course, on Team Taylor and the Kansas City Chiefs, but he's now also a part of an investor team hoping to jumpstart struggling Six Flag parks. So far, based on double-digit stock price surge Tuesday, it's off to a promising start. Kelce, a theme park super fan, per the Wall Street Journal, is part of the growing slate of sports stars and other celebrities increasing investor initiatives visibility. So interesting. So I like Six Flags. We had Valley Fair in Minnesota. I think Six Flags was in another state. It was in another state. It was always the other big theme park that had some good rides from what I hear. I think I've been to one once, maybe. Um, but yeah, so he's taking a bite into theme parks. Interesting. I wonder how, the analysis must be good. I mean, he's knows what he's doing. He's a heavy investor in different ventures, him as well as Patrick Mahomes. And now he is getting married to a billionaire himself. So they'll be doing a lot more investing. And so we'll have to keep an eye on this. Another quick sports story. The FBI just announced arrests in mafia-linked gambling sports rigging probe. A Miami Heat current player, Terry Rozier, and Portland Trail Blazers head coach, Chauncey Billups, were arrested on Thursday morning. That's crazy. They were arrested Thursday morning, and also former player Damon Jones was arrested. This is part of a sports gambling as well as um, mafia gambling, poker, card gambling probe that had many people overlapping and arrested. The story is still ongoing and is kind of crazy. You don't really see a former player, now coach, head coach, a current player in a sports gambling probe. So we'll have to keep our eye on that story. I think it was just a crazy sports story. It has nothing to do with personal finance, but crazy nonetheless. If you see that, that's kind of just like a wild story so far. Other stories that we may have hit on that it could have been hit on. There were a few, if I'm not mistaken. We did do a story on landlords and ownership. So investors in the second quarter of 2025 bought one third of all single family homes in America. So that's right. It was a one third of all single family homes in America bought by investors. So this is according to a CNBC report. Real estate investors, both big and small, bought 33% of all homes in the second quarter. That's one of the highest shares in 5 years, and it's a lot of it's attributed to less homes sold in the second quarter of 2025. So even if it was their normal amount of home ownership they bought, it was a higher share just because of less homes sold. It also talked about how the investors are mostly make up smaller investors, people with less than 10 properties. So it's not like some big firms doing a lot of the purchasing. It was smaller investors, um, less than 10 properties. I don't know if you guys saw this, but Amazon just announced that they're thinking that robots are going to take 600,000 jobs. Amazon is one of the largest employers in the US domestically and well, in the world, to be honest. And they said that they see that 600,000 jobs or they will replace 600,000 workers with robots over the next 8 years. That's their plan. So keep an eye on that. I also saw a crazy story. GoFundMe is being used to buy groceries. GoFundMe CEO came out and said that there are people now that not just using it for disasters, emergencies, help with bills, medical bills, but they're actually people that are crowdfunding for groceries now. That's how bad things have gotten. Because inflation has cooled on paper, but prices don't go back down, as we know. They actually stop going up as fast if inflation's cooling. So people are starting to use GoFundMe for a lot different sources now, and that's kind of just crazy to think about. I don't know if you guys saw this. The NBA did kick off. We're doing sports stories, so it is interesting to talk about. The NBA did kick off, which I don't know who you cheering for. I saw that Wembanyama did well. His debut, 40 points or something of that nature. And, we'll be watching this. Now the NBA has to deal with um, some more stuff with their news of the gambling operation, which is not going to be good. Let's get into questions of the week. Questions of the week. First one is what percentage of their income does the average American pay in taxes? What percentage of their income? So that's the effective tax rate. What percentage of their income does the average American pay in taxes? What, 20 something percent? The answer is 29%. Income and federal, state, local taxes. That's interesting to think about. Income and state federal taxes, 29%. If you think about that, this is not income, but property taxes, of course. Florida is trying to put a bill to measure in 2026 to eliminate property taxes. If they actually get that passed, that'll be quite interesting to see if there's a ripple effect for that. Next question is how much are Americans expected to spend in total this Halloween? How much per person? I think we did this one before, but $200, $100, 114 per person. That's how much people are spending for Halloween this year on average. So we have some really, really good stories. We also had some good questions of the week this year. Make sure you share this with your family and friends. You like, subscribe, 5-star rating review, share this with your family and friends because we're going to do this every week. We did do the Knowledge Hub at the Freelancers Hub this yesterday, which was a great event. We had so many creatives, freelancers, people that were working on different things, and it was good to share ideas, share thought process. We might have a guest from that day coming out to a podcast next week to talk about foreigners, expats, and how they can deal with finances if they're living in a certain country, maybe you want to plan to travel or move to somewhere else. That's always a big topic and a certain topic that we can touch on. So we will do that more than likely. So again, stay tuned, keep sharing this, and we'll talk to you next week.